Good morning, everyone. Welcome to Admiral Markets. My name is Chris, and we're going to take a look together at the Forex market. Before we do that, though, please be aware that this webinar is intended for a global audience and may not be suitable for everyone. To find out more about that and other conditions and details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and other global financial markets are considered high risk and may not be suitable for all investors and traders. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. All right. For those that have joined more often, you are aware of this, but perhaps you are joining for the first time, so be aware that there is a special deposit bonus available throughout April. And if you want to know more about the details and conditions, I think it's definitely worth your time to take a look at this link and see if this is indeed interesting for you. All right, so take a look after the webinar. Today's focus will be on price action. And we're going to use candles and the close, the wicks, and the direction of the candles on all time frames to gauge and understand the market structure and whether there's an opportunity for today. Alrighty. First of all, let's take a quick look at the calendar. We did have some Aussie strength first of all. Today, maybe there was some Aussie news yesterday evening. Today we have meeting minutes in the pound, so the pound has quite a substantial list. And the meeting minutes will be interesting to see if the vote did change by any chance. Basically, there are 9 board members, and the main question is that they all vote in favor of keeping the rates the same. It's expected that they all did because of the fact probably that there are elections in some 2 weeks, I guess. Probably not expecting any change there. Other than that, we see existing home sales for today. Regarding that rate change, because that's basically what you're voting on, I saw an interesting graph yesterday that showed that the dollar is expected to have a, this was actually a big bank that released basically how many months from now does kind of the market expect a rate hike to occur? And the dollar was 8 months at the moment, and the pound was 15, and the euro was skyrocketing above 60. It was interesting because they plotted on a graph, so that was pretty interesting. But anyhow, be interesting, of course. We could speed it, the rate hike for the pound could speed up after the election. Let's see. Let's take a look at the charts now. So price action is the core focus, and I'll try to keep the chart as clean as possible for that mission. Yesterday, there was a euro bounce at the 50 fib, and it didn't fall back anymore, right? There was the analysis that the euro dollar could be bouncing off that level or could fall to the 61.8, and the euro dollar seemed a bit doubtful in my opinion. I like the euro New Zealand more, I said, but the euro New Zealand actually surprised me myself a lot because it really rose substantially. So the euro New Zealand was a bit of a headache yesterday as the trend that started out in the day kind of reversed. The New Zealand was the strongest and the euro was the weakest when we had our session yesterday, and the roles kind of became the opposite in the afternoon. So the euro New Zealand unfortunately really moved up a lot, heftily moved up and retested this top. So for my short this is for the strategy that I'm practicing now, I moved my short in fact just above these tops, which is a 4-hour top at the moment. And well, not yet, quite yet, but could soon be if this candle closes. In any case, I used it as a method to lock in some profit and to reduce the risk on the other trade. As you can see, all in all, the trade should be slightly in positive though, because this one is up 200 pips and this one is down, I guess, some 60 with a bit more bigger position size. Anyhow, still it should be up. So this momentum on the Euro New Zealand that we had yesterday makes me a bit cautious. I think that we could see a zigzag. We bounced off the 50 fib here, so it's probably going to be a zigzag, and we probably see a continuation of that upside momentum. We did see also some divergence, so I don't think that the downside here is very strong at this moment. Certainly not after yesterday's upside. The euro dollar I found a bit more, I was a bit more cautious of the downside. The momentum that we had was pretty strong early in the morning, but that's something that can happen quite often in Forex, is that momentum shifts can occur pretty substantially in one day, right? You see sometimes pound making, for instance, a substantial down, up, and down all within a day. And the euro dollar was one of those days where we had kind of a fall prior to the market open in Europe, or London at least, consolidation, and then a rise. If anyone was trying to buy from the 50 fib, then waiting for 5 to 6 candles on the 5-minute chart did prove to be a decent idea, because we got 2, 3, 4, 5, 6th candle. That was the idea, and one could buy it here at 106.72 with a stop loss below here for probably about 20 pip stop loss. And the trade is now up 90. Depending on how long you wait with that trade, obviously, right? So that's how you can use that time factor rule in your favor. If you see a strong momentum, if you see a strong momentum like this, right? We don't know exactly how far it could go. We have an idea, but obviously it could go further. And where do you put the stop loss in that case? So that's always a bit more riskier. If you wait for a bit of time factor confirmation, you can pick kind of the turning spot a bit better, in my opinion. This is a classical example that we discussed beforehand. So if you were looking to buy it, perhaps from the 50 fib. I did say that if it moves up into here, that there could be a turn back down. And then it depends, right, what the long term does. Let me see if I can open a drawing tool. 1 second. Here we go. Right, this is down, and then we will get the bounce, but we will also face resistance. And when we face that resistance, this downside will be important, because it will either be the move down to the 61.8, or we will get this momentum. So this is kind of the crucial spot. And that's where the spot where, if you're in the long, you have to keep an eye on it if you can stay in or not. Because if it does crash, of course, then you want to try to get out at zero. But if there's some sign of upside, try to hang in for the bigger profit. So that's always a bit of a tricky point, right? In this case, I don't think it was too bad. Let's see. Although I didn't trade in the afternoon, so it's difficult to say for myself. But considering the price action on hourly, I think if you did trade it, it was okay to stay in. Eventually, we get 5 or 6 hours here. And when that happens, then obviously we have even more support on the hourly chart. Anyhow, that was yesterday. Let's take a look at today. Yesterday ended up as a doji on the daily chart. Showing a bullish oscillator here as a support. We have a bullish weekly candle, and yesterday's fall could perhaps be a retracement of that bullish candle. And if we look at the 4-hour chart, we basically simply have bullish candles at the moment, right? So I think it's overall we can safely say that we're in a bullish mode at the moment. It would be good to see a break of this this fractal, this 107.80 level, 107.75 level. If price manages to push through with this current candle through that level, then the next 4-hour candle, a retracement to perhaps the 38.2 fib of that candle, so we can put a fib on the candle itself from bottom to top. Wait for a pullback to the 38.2 fib with a stop loss below the candle low. I think could be a decent trade, and basically trail stopping more or less every candle, perhaps, unless it's a very weak candle, unless it's a very small candle. You might want to be careful with trailing that one. For instance, in this downside, let's say someone took a short here and you're trail stopping these lows, these highs, excuse me, then you might want to be careful with a smaller candle like this. You could get just a pierce of that high or go, I don't know, 20 pips above it. That should do as a trail stop. Here we broke it by 6. Here we broke it by 2 pips. As long as you stay a bit further away from the high, then typically you can just trail stop these highs and exit when it turns around again. Right? Sometimes if you have a choppy upside, for instance, or downside, doesn't matter, but you're going to get out of the trade maybe too soon. But in this case, I think we don't want to hang in too long because the trend from many ways is still down. Right? So this is more of a reversal trade. So that would be my idea. But I would like to see a break of 107.75. Basically, if you look at the 4-hour chart, we have bullish candle, 2 bearish candles, but inside this big bullish candle, then again a bullish, this is again a bullish. As long as this candle closes decently, remains bullish, and pushes a bit above this fractal, I think the next 4-hour candle could be a swing trade buy for upside and just trail stopping those highs. And as soon as we get the entry, if I get the entry next candle, and the candle after that, and the candle after that shows a bit of bullishness, then pretty quickly a trade like that is going into break-even status. So if that idea is not clear, what I'm thinking about, just let me know. And you can see this break right here at the same moment that we had 5 to 6 candles, and ultimately got an impulse to the upside, and also retracement to the 50 fib, and now could be completing a zigzag. Alrighty, so otherwise let's move over to the pound. Anyone who has interest in the indicator, the best is to send me an email. Here, let me quickly just send me an email with which indicator you want, and I'll send it to you, okay? Let's see, pound dollar. It's kind of the same thing, to be honest, because the pound is also bounced off the fib, the 38.2 yesterday, a bit higher than the euro, which was at the 50, and is showing bullish price action as well. So it's kind of the same story here. Would like to see a break above this fractal to confirm the upside potential here. The price action is already bullish, but at this moment we have lower lows and lower highs on the 4-hour chart. Once we break through 149.70, we have at least a higher high, but it's probably would happen, or it's probably going to happen because we broke out of this correction too yesterday. So same story at the moment. Let's take a look at the euro yen. Euro yen ultimately Did have some momentum down yesterday. Turned out to be probably a bit too choppy for that downside to continue, and then broke out of this particular trend line, and remains relatively choppy, kind of making this pattern with lower lows but flat tops at the moment. Does have that downside momentum as yet, but it at the moment is still in consolidation. And yesterday's break didn't go too far. Now at the moment, a break above this resistance could provide a breakout to the upside. And considering the momentum we saw yesterday, that could definitely happen. But for the moment, I think the euro dollar is a bit more interesting. That also has to do with the fact that the dollar yen, if I can find it somewhere here. There we go. Has bearish price action at the moment. It did have a zigzag up to that 120, which provided the resistance as expected. Now it's showing a bearish price action. Kind of have a group of 5 candles already that didn't break the top, so we're getting into a spot where we might continue with a correction lower. Still a bit early, but it seems the most likely in my opinion at the moment. But I think that, let's see, daily chart. We do have daily bullish candles. It's a bit of a mixture at this moment. I wouldn't want to trade this one actually at this point. It could still make one more dash up. It could retrace further. At the moment, I would rather trade the euro dollar than euro yen. The dollar yen does not seem interesting either. So let me take a quick look actually at this and take a look at the strength versus weakness indicator. We had a lot of Aussie strength, as you can see, a bit of dollar weakness. But at the moment, this indicator is roughly flat at the moment, so it doesn't provide much. Let me actually, just for the fun of it, see if I renew it, if we get some more information that could be useful. Maybe it's refreshed and looks different. No, it's the angles are all flat, so this doesn't say much at this point, right? So at this point, there's not really a currency that is dominating except the Aussie, but it's retracing. So perhaps the Aussie is worth looking at, the Aussie strength. And the dollar is the weakness. So let's take a look at the AUD USD. Yesterday, I already said that I was in a short yesterday. Reversed that now too long. I already said that that short probably would not last too long because I do expect a zigzag up. And the 61.8 indeed provided the bounce. And we are in a bullish mode on the Aussie. Contrary to the euro and pound, we still have to break the 4-hour fractals. We did it on the Aussie. We have 1, 2, 3, 4, 5, 6th candle. Not breaking this low. The downside momentum is certainly over. We have a very strong price action when looking at these candles. Bullish, bullish, corrective, bullish, bullish. So I took the long stop loss below the bottom here. And I think the best target would be the top here of this wedge, the green line, and the target at the minus 618 at about 80. 0.80, sorry. All right, so that indeed proved to be true. I think this is, you never know, of course, but the fact that we haven't bounced here didn't surprise me. The question, of course, was what would it do here, like the euro dollar? Would this be a pullback for more downside, or would this be a pullback for more upside? Sometimes you have those critical points, and it turned out to be indeed the bounce to the upside, and we got higher highs and higher lows. So I think that this is a longing situation on the AUD USD. We could still get a bit of a retracement, perhaps, if you look at the hourly. Certainly from an intraday perspective, it's quite far at the moment because it's at the H5, but H5 Camarilla. So it depends, but we might. I mean, if you think it's interesting, but you think now is not a good moment, then putting a fib like this on wherever it stops, basically, waiting for a move back to the 50 or 61.8, I think could still be a good setup. Retrace part of that power bar. If you look at the strong candle here, I think that a stop loss, even tighter stop loss, just below that candle low, is something to think about. 77.10, maybe 76.90, and an entry here just because of this power bar, or a retracement of that power bar are both good setups, I think, or good entries in my opinion. And just trail stop each decent candle, depending on how aggressively you want to trail it. If you really want to be aggressive, you can do every candle. If you want to give it a bit more space, then look at the nature of the candle. Is it a small candle? Still wait, right? For instance, this candle. You might want to still keep it under here, or if it's a strong candle, definitely you can use each high. Look at this upside. Most of these candles, in fact, each low, excuse me, is a good spot to trail it. Here too, each high is a good place to move the stop loss. So considering the strength of this bar, if you look at this 4-hour bar, the close near the high is important. The overall size is important, and that's a pretty big size, 860 plus pip. Candle for a 4-hour chart on the Aussie is pretty decent. It's something probably comparable to this. Let me take a look. Roughly 75. Here's about 75.2. Certainly one of the strongest candles when you look overall in this chart. And it's closing above resistance, this resistance. No wick, hardly any wick here. So those are all characteristics and signs that this particular candle, I think, is strong and will have enough power in it to push the Aussie higher, at least high enough not to probably get a big loss. If anything, it could be a small loss, but probably a profit. So I think this is a decent probability, just looking at this candle and also fractals. All right, so once again, if this is not clear why I like this candle or why I like the potential for longs at these two spots, just let me know. Otherwise, I'll move on. We can take a look at the higher times. I was looking at 5 minutes because from an intraday perspective, I'm curious about catching 5-minute impulses. I was primarily using the indicator in that role, but for swing trades, I use different things, but it's true, why not? We can look at the hourly. Could be useful for swing trading too. Let's see. We have a rise of the Aussie indeed, and a fall of the dollar. So, from that point of view, it makes sense. Dollar is still above the Aussie, preferably, I guess they're aligned, but the momentum, the angle is there. So the AUD/USD from that point of view makes sense. Here we have one falling and is below the zero line. That's the yen. So we got some yen weakness. Okay. We have the euro flat. We have the CAD flat. Swiss flat. New Zealand flat. So I guess the only ones that have an angle are the dollar and Aussie at the moment, and the yen. So perhaps the dollar yen, the Aussie yen, sorry. Yours looks different. Yeah, I don't know why. That strange indeed. Sometimes when I place the indicator again, the lines also sometimes seem to be different. So I'm still a bit cautious about um, the indicator. But you know, in general, it's at least it's a good idea about which one is strong, which one is weak. More it really doesn't do, so I don't think that's anything particularly bad about, you know, if there's some difference. It is a bit strange, I know what you mean, but which one is strong for you, Mudras, and which one is weak for you? We can take a look at those. If you have information on that, we can take a look. For a moment, let's take a look at the odd yen. We saw yen weakening and Aussie strengthening, so we do see indeed yesterday a bullish day, but a wick as well. But today's day is already broke yesterday's high and is approaching this resistance spot. So it doesn't look like we're at a position to go long now, considering prices right at our resistance. But we obviously see the potential for price to break through that resistance pretty soon. For the moment, though, the odd yen is still trapped in between these supporter resistances. Considering this bearish momentum, we already had several weeks not breaking this low. That could be a sign of weakness to the downside. Now, I'm not sure how I would want to trade it. I think personally, not now, as you already understand. If we do break above 92 with this 4-hour candle, then perhaps a retracement of the next candle, the retracement of this candle with the next candle might be a potential for a long, just like the euro dollar. That would be one way of doing it. Zooming into lower time frames and trying to snatch maybe part of that upside tomorrow or even later today, perhaps. At the moment, I would say it's potentially at a good breaking spot, but I'm not jumping to trade it right away. But it's something that could be on the watch list for trading, and specifically taking a look at this 4-hour candle if it manages to push through. I wouldn't be trading to the opposite side. You might think this is a strong resistance, which it is. Why not trade it to the downside? That does not seem so interesting, because if I look at the 4-hour candle that closed the previous one, I see a strong close, I see a strong candle. And in that regard, I don't think a turnaround at the moment has good odds. Let's see, Madras sees on his indicator yen weakness as well. So the Aussie yen seems to be the best. Let's see, is there any other yen pair that could make sense? Well, you don't have to wait, obviously, but that's just my way of doing it. The fractal itself, actually here was already a fractal that was broken, which would already give a potential for an entry, in fact. So some of you are maybe already in that trade. If you did that, then that's okay. I typically don't like to go long right a few pips in front of resistance, though. That's the thing. Because yeah, there's always the higher probability that price could struggle there. It's not always true, though, right? There are many cases where price breaks through it. But for instance, here you can see respect for this fractal and still one more downside. So it depends how cautious you want to be. But I like to see confirmations and more proof of a potential break. And now we're right a few pips in front of that level. So in this case, I'd rather wait than go long right in front of 93 and this triple or quadruple top. If you took the entry upon this fractal break, you're already in the trade and you're up a few pips. Makes it a bit different, right? Or let's say you see this candle here, this bullish candle, and you decide you're interested in that candle. Let's take a look at this bullish candle. We have a close near the high. We have a decent size, no wicks. So let's say you're interested in that candle, and you take it upon the close, or you take it upon the retracement to the 50 fib, right? In that case, of course, the fact that here's resistance doesn't matter, right? Because it's far enough away for an entry and still a lot of space to that level. So that's one way of trading it, or even trading the break of this high. It's a bit more aggressive, obviously, when you see this down momentum and then the break to the opposite side. The doji itself, I would not trade. It's a bit of a weak signal. Doji is just a doji, and we had a bearish momentum. I wouldn't consider that to be a long. But the break of the high, perhaps, that would be aggressive, and obviously the confirmation of this candle would be more conservative. The break of this fractal would be even more conservative, because then you're waiting for a higher high, and the break of this top would be the most conservative. But considering that this is the last option left, that's the only one left on the table to discuss at the moment. Let's see. The other option would be to wait for a retracement, of course, by the way, which I forgot to mention. Would be a retracement of this candle still to the 50 fib. That would change things, because then we have a discount. You can put the stop loss below the candle, and I would be okay with that, because we have a strong candle and we have a discount and some space to the resistance. So it's either that or a break and then taking the next retracement of the next candle. Where am I putting the fib? Where are you putting fib on one candle? If it's a strong candle, for instance, if there's a big wick or a reversal candle, then I don't mind putting the fib on the candle itself. So let's see, Madra said, let's see, we have pound odd as suggestion, Kiwi dollar, pound strongest. Let's take a look at the Kiwi pound then. But they're retracing downwards, okay. So perhaps the New Zealand indeed. Let's take a look at that. Let's see. Let's take a look at the Kiwi. All right, daily. I would say, I mean, the last three candles were certainly not decisive. They look wishy-washy with wicks on top and a mixture of bull-bear, but before that we definitely see decisive bullish candles. So I would still give the overall sentiment to the upside. We see the same pattern as the Aussie, in fact, with the main difference that we didn't break this top yet. I think it's the same conclusion indeed as the Aussie. That at the moment looks bullish to me. Let's see, Madras, you have, let's see, daily resistance. Daily resistance. Well, it's true that there are resistance points like this. We do have a fractal here. Weekly resistance is higher. We have a good weekly candle though. Pretty bullish price action there. If you're looking for a sell opportunity, then probably the 886 fib. Yeah, sure. I'm not 100% sure. It depends on how long this session will last, but so I'm not 100% sure. Normally we end around, let's see, 30 to 45 minutes from now, something like that. But thanks for joining, and maybe see you a bit later still, okay? Good luck with the kids. Alrighty. So, yeah, I would be still a bit cautious with that at the moment because of the bullish price action that we have on the weekly and the daily. But obviously, there's a potential for resistance spot here at 78 and 79. Those could be tough spots, and price could pause there or retrace there. Look at the 78.6 fib here, right? Price stop there too, and the 61.8, and the 50, and the 38.2. So the next target would be the 78.6. So I like the breakout potential of the Kiwi 2 above 77, 78 as target. A bit tight, but possible. Retracement to which side? You mean to the... Now I'm getting lost, I see. There's no decent retracement. Let's see. To the downside. Ah, yeah. It was shallow indeed. Sometimes it happens. It's not enough, in my opinion, to... It is shallow indeed. But I would need a bit more than that. It's something to consider indeed. But we need a bit more, let's say, confirmation than just that, I think. On a 4-hour chart, we're running into 17th candle. So I think it is, like from a time factor point of view, okay to look for longs at this point. Daily chart too is the third day. Not still plenty of time to move up. So I think it looks bullish more than anything, and probably will follow along with the Aussie at the moment. Anyone have problems with the sound? Well, actually, if you hear it, then you probably don't have any issues, I guess. But is the quality of the sound okay? Okay. Sound is okay. Good. Alrighty. Just sent a message to Greg. Hopefully he can fix that. I think the Aussie looks the best. Now I'm curious actually about the odd New Zealand. Let's take a look at the difference there. Because we do have bearish price action, so I don't know. Let's see. The daily. The daily is running into support, so perhaps we'll see a bit of a rally. Ultimately, the Kiwi probably has more potential than the Aussie because the New Zealand is in the downside. But we could see a small retracement of the Aussies. Temporarily, the Aussie could perhaps do a bit better than the New Zealand. In the intermediate term, probably the Kiwi will do a bit better. But at the moment, they probably both have potential. This is still in a consolidation. The Kiwi yen, it could be actually better than the Aussie yen at the moment, just because of the fact that it broke the top already, and it is above these resistance spots, or trying to push above the resistance spots. We don't know if it's going to work out, but ultimately it is trying to push through now, and we do have bullish price action. We have all these lows are higher. For our chart, we have bullish price action too. These two negative candles are all within the bullish candle. Could be a long right here or a retracement of this 4-hour candle. So the New Zealand yen, New Zealand dollar, Aussie dollar at the moment, I would say, perhaps Aussie yen later on, seem to be best set up at the moment. Pound odd, let's take a look at that. Pound odd is ultimately still in this triangle. See, with these triangles, price action becomes a bit, especially when the triangle starts to come close here, becomes not so interesting. When the triangle is perhaps big enough, looking for signals of price action at the bounce spots of the trend lines, it sometimes offer interesting trades. Now the space is getting pretty tight, so before you get a candlestick confirmation at resistance or support, the candle itself is already halfway the triangle, so it's becoming less interesting. You can see the triangle on the daily chart. So I wouldn't be that interested in the pound odd at the moment, just because of that. Too much of a consolidation and too little space. All right, so I'm not sure if let's see, if the one, I'm not sure, I don't remember who asked for the pound odd, but if you have any questions about the pound odd, let me know. Specifically, maybe, that you find interesting about it, we can take a look at it. But personally, those are my objections against the pound odd at the moment. With the euro odd is looking a bit weaker. That could be a bit better. Still a bit of a mixed picture, to be honest. I don't know. Maybe preferably, I would say, let this daily candle prove itself to be bearish. And then tomorrow, maybe shorts are more interesting. I would want a bit more evidence on the euro odd. It looks okay, but at the moment I would still be cautious. Also, we know that Euro New Zealand had a pretty good momentum to the upside. Oh, actually, wow, it's closing and reversing. Interesting. Not able to break through these tops. Good for my trade. A bit still cautious with the downside because of this momentum up. It isn't a downtrend though, but it was pretty big momentum as well. So and a pretty big wick on yesterday's daily candle. We'll be cautious with both sides, up and down. Let's take a look at how today proves itself on the Euro New Zealand and Euro odd at the moment. That's how I look at it at least. Let's take a look at pound yen and euro yen. They're breaking up. The pound yen a bit more because the pound is showing a bit more strength. So the pound yen could be a bit more interesting than the euro yen, I think. But perhaps the New Zealand yen a bit better. Let's take a look at the pound New Zealand. See, the pound New Zealand is actually right at resistance in a downtrend. So I do like the New Zealand yen a bit more. Also, we have pound news. So from that point of view, New Zealand yen looks better. Let's see. I'm thinking if there are any pairs. Pound CAD yesterday ultimately broke a bit, but then showed some disappointing candles upon the break. A wick, and then a big wick with a bullish close, kind of a pin bar. So, if you see price action candles like that, you want to be very careful at least. Try to minimize your risk or get out for break even if possible. If you see price action candles like that, they're definitely signals that could be used to get out. At the moment we have small candles inching lower, and we have one big bullish candle towering to the upside. So yes, we are in a downtrend, but price action signal was pretty strong at the moment to the upside. Now we've seen upsides like that move back down and sometimes continue. We have to see how that how it will go. Here, for instance, a pretty decent upside candle. Here too, followed by downside. So let's see if we got any supportive arguments for a move up again. I would say, considering this bullish momentum, there's a decent chance we can get a zigzag from the 50 fib up to these targets. So looking perhaps for the first 4-hour bullish candle here could be a buy signal. It's a risky one though. Pound Swissy looks choppy. CAD yen could be the same as the New Zealand yen, in fact. It too is in a bullish trend, breaking above these fractals already. And it looks like I'm up on both positions, in fact, at the moment. This one and this one. So ultimately, New Zealand yen, CAD yen, I would say, probably the New Zealand yen the best, CAD yen second, AUD yen third at the moment, pound yen probably fourth. That's how I'd categorize it. Kiwi and Aussie, roughly equal, and then second best maybe, or third best, perhaps the euro dollar, or even pound. Did we take a look at the pound? Oh yeah, the pound. Maybe even the pound. More so than the euro. Let's take a look at the euro pound. Consolidation, but in a downtrend. So they're roughly, at the moment, they're roughly equal. Yeah, sure, Beverly. We could take a look at the. I don't think we looked at the dollar CAD actually. Let me take a look at that first. Looks like we're getting a bit of CAD strength at the moment. We have a bearish candle, but it's a very small candle. No wick, but still small. And we have higher highs, higher lows. But daily chart, we know that we had bearish momentum, but we're having some bullish candles here. So it's a bit of a mixture at the moment. And although I see the downside potential, it's still on the early side when looking at price action, I would say. So I would like to see a good 4-hour candle here. CAD second weakest, that surprises me a bit. Well, in that case, then let me take a look again at that indicator. CAD second weakest. Yeah, you're right. Yeah. Well, then in that case, I take back the CAD yen as second. Then definitely Aussie yen is better. Because I would consider that to be important. So now I would then be cautious with the CAD yen. I still think it's bullish, but the New Zealand yen is anyhow a better one, I think. So I'll update that to CAD yen, sorry, New Zealand yen, New Zealand dollar, odd yen probably better combinations, with pound dollar, pound yen being a third, and euro dollar a fourth perhaps. And now we were looking at the dollar CAD. Oh yeah, the dollar CAD, if we get a good bearish candle here that has a good size, closes near the low, roughly pushes through 122, a retracement of the next candle for a short, I think makes sense. But now it seems a bit early. Dollar yen seems a bit early too for any side because bearish candle, but up momentum, good bullish candle on the daily chart. So I guess at this point, probably more bullish than bearish in fact. If we don't break 120 or 119.80 within this candle and the next two, it's starting to be more bearish. If we do break up, though, I don't see any good trade at the moment because we're bumping into so many resistance layers that I'm not a particular fan of the dollar yen upside. I'd rather trade the New Zealand yen upside. And New Zealand yen could be traded upon the break of this fractal or retracement of this candle. Let this candle close and wait for a retracement to the 50 or 38.2 fib. So all in all, basically, when looking at price action and candlesticks specifically, not just only patterns, but just the candle itself, there are a couple of things to look at. Obviously, the size, relative size on the time frame, the close, where is it in relationship to the high or low, and is there a wick, and how big is the wick, on what sides, and the relationship of this candle compared to the previous one or previous two or three. Here, for instance, this candle engulfed the one before that, had a close near the high, and was pretty big. So that was a good signal. Even a candle like this, for instance, right here, where I have the cursor now, it could close near the high, a decent size, fully above resistance, and we get the upside, after that. So those are things to consider, I think, when looking at candles. They're both good as entries, but also as exits, as trail stops. Sometimes, I mean, you'll bump into early exits if you trail stop it a bit too aggressively. But most of the time, it does a pretty decent job. Obviously, you're going to bump into sometimes, wacky downside like that, up continuation. That nothing is ever perfect. Here's an example, for instance, when if you're in the short here, for instance, and you see bearish, small bullish candle. If you trail stop it aggressively and you go right above this small candle, you're going to get stopped out. But if you're a bit more patient and use stronger candles as trail stop loss, then actually you put it above this one and you manage to live through that retracement and you get downside, and you can use this candle to trail stop it, because that's again a strong candle, right? So if you keep using that as a rule, then you would probably exit somewhere here, unless you have a TP. Most of the time, if there's a strong momentum going on, the candle highs and lows do pretty good. In this case as well, but you did get whacked out here. Here's an example of a small candle which doesn't break the high of the previous candle. Most of the time I like price action signals as a confirmation of a zone. So if I have a particular zone of interest where I want to trade, either to the up or downside, let's say there's a fib. Let's say, for instance, let's take a concrete example perhaps. Well, yesterday we talked about the euro dollar 50 fib, for instance, right? So obviously, this is not the best candlestick pattern necessarily, but let's say I have interest in this fib. So if you wait for a 4-hour candle, for instance, or whatever time frame you trade, it can give that, it's basically a trigger in that zone of interest. So instead of just trading right in that zone of interest, the candles can give kind of a confirmation, give a trigger in that zone. So if I, for instance, the Aussie, let's see, where's the Aussie? Same thing, right? Yesterday, so there's a good chance of a bounce at these fibs. Now we don't know if price will use these fibs or which one. You could try to trade it just at the fibs, but you can also try to say, okay, this is my zone of interest at the 61.8, and use the candle as a confirmation that price is indeed turning at the fib. So when price stops at the 61.8, after you see this bullish candle engulfing the one before, that could be the signal to take the trade that is, based on the interest of the 61.8. So it's an interest zone and a trigger. And the price action is good as a trigger. Other concepts work well for interest zones. Wave analysis is not good as a trigger, but it's good as getting an idea about which zones could be interesting. But it's not so good as a trigger. On the 4-hour, I would, it depends. I don't think there's anything wrong with the TP. I do like to start out with an empty TP and kind of see how things react first. How strong is the momentum? Often enough, you'll get double divergence on lower time frames. When you see a single or double divergence on lower time frame, and maybe perhaps the candle's getting a bit smaller, you can think about a TP. Where would be a good exit? It's a good method because in that regard you can. You don't underestimate how far it could go. If you put a TP right away, then sometimes you aim something and it gets hit, pretty soon. And if you maybe wait a bit, see how far it pushes first, then put the TP, you kind of squeeze a bit more out of it sometimes. So it also depends if it's a reversal or with the trend setup. I do think that on a 50-minute chart, obviously you could still use a trail stop, but you're going to bump into, well, it'd be the same principle. I mean, here too, you got upside momentum, and you trail stop the lows or the highs here. But in this case, I would be even more concerned about, I don't use the candles here, to be honest, on the 50-minute chart, but I don't think there's anything wrong with it necessarily, but I would be more inclined to use stronger candles. Or with the Aussie, even fractals. I mean, if you have a very big candle like this big 50-minute candle, then fractals will do pretty good as well. Modris is adding, let's see, historical resistance plus fibs plus trend lines is confluence. Yes. Confluence is always very, very useful indeed. Sometimes these candles obviously give even very good reversal patterns. I mean, if you have a big pin bar wick, for instance, that could be a great signal for a reversal. The euro yen, sorry, the euro New Zealand, some might consider that a pin bar. For me, a pin bar is good to have if it's at least closes in the opposite direction of the trend. It's still closed bearish. I wouldn't it is a pin here, but I wouldn't consider it a very strong or even a good signal. It's a mediocre signal. I wouldn't want to trade it. But it is a caution, a warning for downside, though, that the downside could be in struggle a bit. Here was a pin bar. That closed bullish, but perhaps had more potential because of the downside momentum prior to that, which is another factor one can think about. Here's a pin bar. Obviously, when you trade a pin bar, you have to have a target that's realistic. You don't want to aim for the sky. Most of the time, you want to aim for something that is a doable retracement. What is a doable retracement? Well, a fib level, for instance, from here to here, aiming for the 38 or 50 fib. Aiming for a moving average. Aiming for a resistance zone. You see here, this resistance zone right in the middle of this downside. That's where it stopped as well. So that's how you can use it too. So you can use a continuation or reversal, but obviously reversal, you want to be careful. And maybe be a bit more demanding with how the candle looks like. Any questions, I mean, with regard to the market or with regard to candles? Well, actually, I use more often moving averages, but lately, the last few webinars, I have this alligator on. To be honest, I think that both are, for me, just as equally fine as or I should say, actually, the alligator is equally fine as the moving averages. Sorry. What I like about the moving averages is that they give a nice support or resistance zone. What I like about the alligator is the fact that you can clearly see if there's a consolidation because they start to be flat and intertwined quicker than actually the band will never do that. You'll just see the band will always be a band. The only thing you could see is if other moving averages are intertwined with it. So that's kind of the difference. The band is great for support of resistance, but the alligator is good for momentum and kind of consolidation. So they both have their uses. Yeah, standard settings indeed. And the band is 3 times 21 EMA indeed. High, low, close. And the alligator, I guess, or the moving averages as well, by the way. It's we don't have to always use them every time we look at the chart, but they give a quick reference at least. Sometimes it's useful just to get a kind of a quick confirmation. I mean, most cases, you can already picture the moving averages, even if you just look at a blank chart, right? We already have an idea. But it's a quick reference point. I think, in any case, if you're not a big fan of moving averages, just adding one already does just the trick, or does a good job of giving that extra kind of feeling for price action and trend and momentum. Well, let's use the 21. Right, so if you're not a big fan of indicators or tools in general, then, and you rather look at price action, then just putting one on like that, and otherwise looking at the naked chart, I think is simple, yet still gives a bit of added value. Alligators not as entry, no. No. It's, for me, indeed, trend, momentum, consolidation. The band is support and resistance, not so much the alligator, I think, although it could give an idea. So people who really like price action probably be looking at it like this, or perhaps even this one indicator, but I like to use a few indicators, as you can see. Let's see, one question, no problem. I would like to know which platform you would recommend for admin markets. Let's see if I open a live account with you. Yeah, sure, Beverly. That's maybe the best indeed. If it's regarding accounts, that could be easier. I will write down my email. There you go. Yeah, no problem. Anyone who has a question regarding accounts or anything in the trading room, by all means, please feel free to send me an email. It's in the chat. Any other questions, but by any chance, about price action, perhaps? I mean, we didn't have any webinars actually specifically focused on price action, I think. We had a few a while ago on pin bars, I think, but pin bars are great, but they're a bit limited. I mean, they obviously occur, but they're quite a bit rare in a sense. So it was a bit too limited, I think. But they do make an easy scan if you're looking for pin bars, and it's easy to just look at many charts quickly. So then it's going to take a look, by the way, at how to set up and manage your space. And tomorrow we're going to take a look at how or why using the 80-20 rule, which is a concept basically to become a bit more efficient, is useful, and how it's useful in trading. last glance, pound is pushing, euro seems to be moving down just a tad. Odd yen pushed indeed. Kiwi keeps pushing. Odd USD keeps pushing. And the last one is the Kiwi. Also seems to be pushing. All right, let's see how this goes. One more question. Sure. Actually, I think there's a setup now. If that wasn't clear, apologies. But I think the Aussie, as I said at the very beginning, this is a setup that could be taken now at this candle with a stop loss below the candle low. The entry here at the candle close, I said, or the candle retracement, plus a stop loss either where I have it or below the candle low, in my opinion. The TP, I would use a trail stop loss, but if eventually the TP, I would say the ultimate target could be the 61.8, minus 61.880. Yeah, no problem, Greg, no problem. That I think is the ultimate target. But I think this is a decent setup right now. Even now, or where I took it was at the candle close, as you can see. So, but it's not that far away. It's just a few pips higher at the moment. Depends how precise you want to be. I used a bit of a trail stop loss below the fractal here, but I would even already move it actually up to this fractal. In fact, I can do that right now. I'll go 20 pips below that. Probably it's a lot already, but okay. Something like 87. Like there. Now, you could even use the candle low here, in fact, because it's a strong bullish candle. So using that candle low already could make sense. And 76, 95-ish could make sense too as a stop loss. So that's a good 4-hour, I think a good 4-hour candle, a good 4-hour break. It's a candle near the high, close near the high. It's a strong candle, big candle. It is pushing through the fractal, closed above the fractal. I would trail stop stronger candles probably, or any significant warning sign, any significant bearish candle. I would trail stop just below those lows. Ultimately try to hang in for the 80 level as the target. This one looks good. The Kiwi too, I would say. But Kiwi, I think the Aussie looks a bit better. The Kiwi will probably be just as good though in the long run. Would like to see maybe how this candle closes first. But ultimately, a entry right above this fractal break or 20 pips above it, maybe 77.30-ish, could be a buy stop with a stop loss below this fractal here. But ultimately, I think the Aussie at this moment looks a bit better, personally. Therefore, I would say maybe wait for this candle to close. The Kiwi yen and Aussie yen. The Kiwi yen did look a bit better. I think the Kiwi yen entry at 92 with a stop loss at 91.47. And probably a target at 93.20. But here too, trail stop as well. That could be a pending order, but probably let's see, 92. Yeah, 92. You see, this is not a bottom as yet. But I think could still be an okay stop loss. Technically, we should, I think, still go below this bottom. But considering the current bullish candle, I would consider using a tighter stop loss. But I guess if this candle does close bullish, then this is more safe to use as a stop loss. So if you want to wait a bit for this candle to close, then a tighter stop loss would have more confirmation. That's the only thing I'm thinking about, basically. Either this or this as a stop loss. If the candle closes bullish, then it makes it a bit easier to use it. Because if this turns into a big wick, then this stop loss is not that safe anymore. That's the thing. Yes, an entry at 92, but then in that case, if you use a pending, I think still the safer stop loss is 91.11. And as soon as this candle closes, one could tighten up the trail stop, basically. Yeah, to move it probably below it. At least reduce the risk in that case if it does turn. If this candle does close, then the next candle, I know this sounds complicated perhaps for some, but if this candle closes bullish, then a tighter stop loss could be used. This candle is not closed. Although it looks bullish now, it could, still end up as a big wick. We don't know. If it does end up as a big wick, then the 91, the stop loss here at 91, it could be immediately moved to the candle low, and the risk is reduced by 75%. If the candle is bullish, then a 38.2 fib or 50 indeed entry could still be valid. We got a good hourly candle indeed. It seems like we're retracing that hourly candle. So an entry here or at 92.04 actually. Sorry, that's the 50 fib, 92.04. Looks like a decent probability. Yep, no, go ahead. Let's see, one more question from Modris. So those are my thoughts about the New Zealand yen. I think the Aussie and the New Zealand yen probably are looking the best. And then the Kiwi and Odd yen, the opposites, also have potential. I take screenshots using a program called Snagit. Then I click on this red button, and then I get a screenshot. Pretty simple. So it's a very simple tool to use. I'm sure there are others out there as well. Does anyone know any other screenshot tool? I think you can actually just click a button on your keyboard with PRTSC. That will also make a print screen, I think. Justinas uses that indeed. Also uses print screen. Yeah, indeed. But I think the advantage of this Snagit, I guess, is that you can choose which what scope of or what exactly the field you want to copy. The other option indeed would be print screen. Press the print screen, go to perhaps a painting program as Vlad said, and then hit Control CV probably, or Control V, I guess, is paste probably. Ah, Greg has interesting. I never knew that actually. Right-click in the chart. Save as picture. Interesting. I never actually ever saw that one. Active chart. Huh. Interesting. But the terminal will be visible. Oh, as is. Okay. Yeah. And I think there are other tools out there if you don't like the print screen or this right-click chart. But I wouldn't know by heart. But there must be others as well. Alrighty, folks. Well, thanks for joining, and hope to see you tonight with Nennet and tomorrow with Nennet and myself. And let's see how these trades work out. Keep an eye on these 4-hour candles, I would say, because you never know how the market can twist around sometimes, like yesterday. So trade safe, and do you look at indices like DAX, gold? Indeed, I don't look at DAX indeed or indices. I wouldn't mind, but I don't have at the moment the access. Gold, I think, is I think still we can get that zigzag, but at the moment it's pretty choppy, obviously. But if anything, I think the potential zigzag up to 1267 is still a decent chance, I think. It's taking a bit longer than I expected, but we have more bullish. We have indecision candles the last 4, but we had prior to that a bit of bullish candles. We have a downtrend still, though. In all in all, I think a zigzag is a decent potential here, but I would want to see some confirmation of that. Now it's just going sideways, so perhaps some push through 1210. A good 4-hour candle through 1210, or even a daily candle through 1210. And 1220 maybe. I don't know. At the moment, I think that looking at this, a push through that could make sense. Or even now we're stuck in a consolidation. Even if we were not to push through up but down, maybe ultimately a failure of this this zigzag. Definitely wouldn't trade it in this zone. Would want to wait for a break at least. All right. If you are interested, in my opinion, on DAX or any indices, you can try to make a screenshot and send it to me through email or upload it and send a link, and I can take a look at that. Right. So that's one way of doing that. Hi, Amos. We're actually just wrapping it up. In fact, if you missed the Camarilla points, not sure what you mean, but I can send you the indicator if that's what you're talking about. We used the Camarilla only a couple of times when we didn't use it that much. We were looking more at higher time frame price action, in fact, not so much on lower time frames. But if you're interested in the indicator itself, I can send it to you. All right, so thanks for joining again, and hope to see you soon. Good trading. Cheers.